Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, January 11th. Now, today gets a little bit more exciting. We get a little bit more, actually, some data to report today. And of course, like always, Thursdays always represents the weekly jobless claims. So we'll start off with that. So last week we had 250,000 people apply for unemployment. These are actually in if when I say last week, this is what was reported, so it's always taken the week before. So the forecast for this week's report was 248,000, and it came in at 261,000. So this 260,000 number really represents last week's numbers. So hopefully you can follow that when I say last week. It's just this is when we get the reportings a week afterwards, after it's been reported. So that went up 11,000, which is obviously a little disappointing, but on my personal side of things, it always seems like January always has a higher increase of the weekly jobless claims because you have people going working seasonal for the holidays, and then they go on unemployment once they are released from their positions, the temporary positions that were filled during the holiday season. Uh, I do think you might see a pretty strong jobs number where most people don't like to actually, most corporations don't like to hire during the holidays because they don't want to have to give up that extra time and it costs more money for them giving up that extra time. So they usually wait till the first of the year. I think you might see more of that this year as well, uh, going ahead. Even the investors are kind of shrugging that number off a little bit as well as the PPI here, which is the Producer Price Index. This is the inflation number on the wholesale side of things. They kind of look at it, but tomorrow will be a little bit more important. It will be the Consumer Price Index, CPI number, and that has a little bit more relevance because the Fed usually looks what's going to drive the consumers versus the wholesale side of things. When costs go up for wholesale, they don't always pass that on to the consumers, and so that's why they just kind of look at it, but not give it as much weight as the Consumer Price Index or the PCE. So November we had a jump up in producer price index at 0.4%. Forecast was supposed to go up 0.2%, and it actually dropped. It fell by 0.1% in the month of December. This is the first time in a year and a half that the PPI actually dropped. So this is obviously a good sign for wholesale. Help them out a little bit here. So also today we got headline news. The market is up. We're going to be starting the fourth quarter corporate earnings coming in, and I think Delta came in positive for the fourth quarter. Tomorrow we're going to have some bigger ones, like more of the financial companies like BlackRock to Wells Fargo. I think JP Morgan Chase will be giving theirs out tomorrow. So be prepared for a little bit more volatility because it won't be all data driven. They could be looking at corporate earnings and see how these corporations fared. And that's going to be kind of the big driver. And that's what's kind of driving the market as with the tax cuts and then optimism for the what corporations are doing. Also on the news, China. If you recall yesterday, there was a report out of Bloomberg that came in that said that China's going to hold back or scale back on their purchase of U.S. debt. China came out and said today that's basically fake news. So they took basically the coined term out of President Trump's book and used the word fake news to Bloomberg's report here. So I guess that term is now being thrown around pretty loosely by everybody. But it was just kind of funny to see that they would use that term as well. But anyways, let's go ahead and take a look here at the bond market here. The bond market, as you see, we started off yesterday, way down, and we came up to basically, I think it was only like 2 basis points where we left off from the day before. Right now, we started this morning off lower, and now we're at even. So there's no price change in where we left off yesterday. So pricing will remain the same as where we left off yesterday over here. And then 10-year Treasury, as you can see here, we had see this route going upwards. It's going an upward trend here. And yesterday we had way up here and pulled back. Now we're up at about 2.56 range. We even touched right around the 2.6 range yesterday, and it's pulled back. So 10-year Treasury. Part of this, it had a really good it helped out the bonds yesterday. They had a 10-year auction yesterday, and it came in really well. So with the high spike, the higher yields that came in yesterday, that presented a higher appetite for investors because when you get the higher yields, because these are obviously safe. So it took money away from the stock market, and they did buy more yields yesterday, and that's what kind of helped them out. Now later today we'll have a 30-year auction, Treasury auction, and we'll have to kind of wait and see how that turns out. But yesterday turned out really well, and it kind of saved the bond market. A pretty embarrassing loss yesterday. But that helped us out later in the day as we were way down for most part of the day, and then basically closed, like I said, about two. We closed like 2 basis points lower than where we left out the day before. So overall, not bad. But so that's kind of pretty much wrap it up. Pricing so far about the same as where we left off. If you guys want to get more data, just come over to Twitter. You can find me on Twitter. My handle is Mike Bjork on Twitter, and you can get more data or more information on the markets then. Have you guys have a great rest of the day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye bye.